The Trump administration is quietly dismantling a corporate tax intended to ensure the nation's most profitable companies pay at least some federal income tax, granting major tax breaks to private equity firms, cryptocurrency companies, and oil and gas drillers through a series of regulatory notices issued with little public fanfare. Since June, the Treasury Department and Internal Revenue Service have issued guidance that weakens the corporate alternative minimum tax, a provision Democrats enacted in 2022 to prevent corporations like Microsoft, Amazon, and Johnson & Johnson from reporting large profits to shareholders while paying minimal taxes to the government. The tax was projected to raise $222 billion over a decade. Corporate income tax receipts fell by $77 billion, or 15%, in the fiscal year that ended in September compared to the previous year, driven partly by the regulatory changes and tax cuts enacted in the Republican budget bill passed in July. Regulatory changes benefit major corporations. The most notable changes came through Notice 2025-27, issued in June, which allows companies to avoid the minimum tax if their income falls below $800 million under a simplified accounting method. The Biden administration had set that threshold at $500 million after determining a higher amount would exempt corporations that should be subject to the tax. In September, the IRS issued Notice 2025-49, permitting corporations to disregard unrealized gains and losses on digital assets when calculating whether they owe the minimum tax. Strategy Inc., which holds approximately 640,000 bitcoins, valued at over $74 billion, announced it no longer expects to be subject to the tax. Natural gas exporter Cheniere Energy disclosed it is entitled to a $380 million refund of previously paid minimum tax. Oil and gas companies, including Devon Energy and Targa Resources, also announced they expect to avoid the minimum tax following carve-outs in the July budget legislation. Democrats and tax experts raise concerns. In a September letter to Treasury Secretary Scott Bessent, Senators Angus King, Elizabeth Warren, and other Democrats warned that the guidance creates new loopholes, allowing major corporations to circumvent the law by using accounting trickery to pay zero taxes on their massive profits. Treasury has clearly been enacting unlegislated tax cuts, said Kyle Pomerolo, a senior fellow at the American Enterprise Institute, a right-leaning think tank. Congress determines tax law. Treasury undermines this constitutional principle when it asserts more authority over the structure of the tax code than Congress provides it. A Treasury spokesperson told the New York Times the proposed regulations were a practical approach that supports American investment and competitiveness and were meant to replace the Biden administration's compliance maze that would have buried taxpayers in red tape.